Wow, Rigel Pharmaceuticals just dropped an absolute bombshell of a Q2 earnings report, and it sent the stock flying. In this Talk Tickers breakdown, we're going to unpack exactly what happened, what was behind that massive beat, and what it all means for the company from here on out. All right, so here's how we're going to break this down. First, we'll hit those headline numbers that really got the stock moving. Then, we'll dig into what's really driving the growth, their commercial engine. After that, we got to talk about a key partnership and what's next in the pipeline, before we wrap it all up with their new guidance and, of course, our take on what to expect. Okay, first things first. Let's set the stage with the market's reaction, because it was immediate, and then we'll look at the incredible numbers that made it all happen. I mean, look at that. The market did not mess around. After the earnings came out, the stock just shot up almost 23% by the next day's close. And this wasn't some flimsy little move either. We're talking a massive spike in trading volume, basically doubling. A lot of people were paying attention. So, what caused that pop? Well, check this out. It's the sheer scale of the beat. Rigel didn't just edge past Wall Street's numbers, they completely demolished them. Revenue came in over $101 million, which was more than $37 million above what anyone was expecting. And it was the same story on the bottom line. Earnings per share beat by over $1.30. Just incredible. And you could just feel the confidence coming from management on the call. The CEO, Raul Rodriguez, he didn't beat around the bush at all. He called it a really great quarter and flat out said it was their best quarter ever, all driven by record product sales. So the big question is, where did all this come from? How did they pull off a record quarter like this? To get that, we've got to look under the hood at the commercial engine that's powering this thing. And this right here is the headline number for their actual business. Net product sales jumped a staggering 76% year over year to almost $59 million. This isn't some accounting trick. This is real, powerful momentum in the products they're actually selling. And what's so great is that this growth is coming from everywhere. It's not just a one-trick pony. TAVALISSE was the star, for sure, hitting a record $40 million, up 52%. But look at GAVRETO and REZLIDHIA. They're both pulling their weight and then some, with big growth numbers of their own. The whole portfolio is just on fire. So what's helping fuel this fire? Well, one huge factor that management kept pointing to was the Inflation Reduction Act. Think about it. By getting rid of that Medicare Part D donut hole and capping what patients have to pay at $2,000 a year, it suddenly made Regel's oral drugs way more affordable. And the results? An all-time high in new patients starting their therapies. It's a direct line from policy to sales. Okay, but as strong as those sales numbers are, they're actually only part of the story for this quarter. There was another massive piece of the puzzle, a big development with a key partner that really juiced the headline numbers. We have to unpack this. And here it is, $40 million. This huge chunk of revenue came from their partnership with the pharma giant Eli Lilly. And, this one item single-handedly inflated the quarter's total revenue and pushed the company deep into the black. But, and this is a really big but, you have to understand that this was a one-time, non-cash item. All the analysts on the street immediately flagged this. It's great for the balance sheet, for sure, but it's not the same as recurring cash coming in the door. You really got to separate this from that core commercial growth we were just talking about. So what exactly went down here? Well, basically, Rigel made a strategic call. They decided to opt out of sharing future development costs for one of their partnered drugs. By doing that, they could take a liability off their books and recognize that $40 million as revenue right now. The cool part, though? They still get all the upside. They're still eligible for future milestone payments and royalties if the drug is a hit. So it's kind of the best of both worlds. No more cash burn on that program, but they still get a piece of the action. All right, so let's shift gears and look to the future. Beyond the drugs they're selling now, the next big growth story is all about their pipeline asset, R289. This is their next potential engine, and it's starting to rev up. They're done with the first part of the study, they're about to start the next phase, and the big one, the one everyone's waiting for, is an updated data readout by the end of the year. That's a huge potential catalyst for the stock. Okay, so with a blockbuster quarter in the books, what does it all mean for the rest of 2025? Let's see how management is translating all this success into their forecast for the future. And yeah, they were not shy about it. They raised their full-year guidance in a big, big way. Total revenue is now expected to be about $70 million higher. But what's even more important to me is the guide for their core product sales. They jacked that up too. That tells you they believe this momentum they're seeing is the real deal and it's here to stay. So if you're an investor, what are the key things to keep your eyes on? Well, it's pretty clear. Number one, that R289 data coming later this year. That's huge. Number two, can they keep up this amazing commercial momentum? Number three, any surprise milestone payments from that Lilly deal? And finally, are they going to use their strong position to make another savvy deal? These are the catalysts that will drive the story from here. All right, let's bring it all home. We've seen the blowout quarter, we've seen the raised guidance, so here is our final take, our next call on Rigel. Okay, so for next quarter, what are we expecting? We think that strong product sales growth continues, for sure. But, and this is important, be ready for the total revenue number to look smaller, because it won't have that one-time $40 million Lilly payment in it. As for the stock price, after a 23% rocket ship ride, it's probably going to need to catch its breath a bit. We think the next big move up or down is going to hinge on that R289 data later this year. So, for all those reasons, we're rating the stock outperform. They've shown they can execute commercially, the balance sheet looks great, and they have very clear catalysts on the horizon that could provide some serious upside.
And as always, please remember, this is not financial advice.